it is indeed a silver lining that industry is digitally aware and ease of access to better financial platforms is already changing the dynamics. There is still a lot of work to be done, and fintechs should look into assisting the businesses by creating more favorable and supportive services for the industry. And with that, I would like to move on to our next session, which is divided into two parts. Now,
I just
first
tried
we have a presentation on findings of DFTF, and then there will be a panel discussion on digital financing to accelerate the financing of the Sustainable Development Goals. This session will reflect on potential SDG impacts of big fintechs and on ways to bring a broader SDG lens to the international governance of big fintech. And then the discussion will move towards raising awareness, building outreach into existing institutional networks and structures. Joining us for this presentation and panel discussion are Mr. Naveen Surya, Chairman of FinTech Convergence Council, who will also moderate this session. I welcome you to the show, Naveen, and thank you for being with us. Okay. And our next guest on the panel is Mr. Aiaze Mitha, Digital Ambassador of UNCDF. Welcome to the show, Aiaze, and thank you for your time. Thank you. And joining Naveen and Aiaze on this panel is Mr. Suresh Sethi, MD and CEO at NSDL E-Governance Infra Limited. Welcome to the panel, Suresh, and it is very good to have you here with us. Thank you. And now completing the panel, we have with us Meghna Suryakumar, co-founder at Crediwatch. It is great to have you here with us today, Meghna, and thank you for being with us. And now I would like to hand over this session to Hemant to take it forward, Naveen to take it forward from here. Over to you, Naveen.
The topic for today morning is very interesting but very serious, right? I think it's about development. And before we are a fintech professional, we are also humans, right? And we across the globe, we need to work to see that how does a sustainable development is created for everybody and everybody lives a better life. It reminds me in India, very early days, we used to say that, okay, all we need as a human is roti, kapda, makan, which is like food, clothing, and housing. Of course, the times have changed. You need a lot beyond that. And thankfully, people at UN and many other government and policymakers are working together to identify consistent and cohesive sustainable goals. We're all working towards making lives better for all the people. Now, we being in financial services, we believe that we see some of those kind of being created and those impacted everyday basis. Even I remember my early days at Aiaze, first 10, 12 years, that when used to go in rural areas and work with them, how their lives would change. So, as I said, while we will get into a brief discussion about some of the findings around that, how these impact happen. So we have Aiaze with us who will take us through the presentation. Then we'll get into a discussion with Suresh and Meghna. Both are fintech professionals, have done multiple kind of businesses over 20 plus years. And we'll kind of get into the discussion. So I'll probably start with Meghna, 1 or 2 line introduction, then Suresh, and then Aiaze, and you can also start with the presentation when after. Yeah, Meghna?
Yeah. Thank you, Naveen. Hi, everybody. My name is Meghna Suryakumar, and I'm
Meghna, we can't hear you.
Okay. So, Crediwatch is an AI-based platform that works with financial institutions to tap into the 1 trillion opportunity of underbanked businesses to give them credit. We work with financial institutions in every size across India, and we provided insights over, $2 billion worth of, credit loan portfolios for our customers today. We are working with all the financial institutions and partners to help build thicker files for small businesses.
Thank you, Meghna. Suresh?
Yeah, thanks, Naveen, and good morning, everyone. I'm Suresh Sethi. I'm the MD and CEO designate at NSDL E-Governance. As you will realize from the name of the company, we are one of the most trusted names in the industry, which is building e-governance infrastructure for the government and various state governments. We have been involved in a lot of public finance projects like tax information networks and issuance of PAN. And prior to this, I was one of the founder CEOs of India Post Payments Bank, where in India we leverage the India Post or the postal network to provide banking and financial services at the last mile. So look forward to this discussion.
Thank you, Suresh. Yes, over to you.
Yes, good morning, everyone. It's a pleasure to be with you. My name is Aiaze. I am a digital ambassador with UNCDF, and I was very much involved with the UN Secretary General's task force on digital financing of the SDGs, and now taking forward a lot of member state offerings from UNCDF and UNDP combined. Happy to be here.
So, Aiaze, we'll start with your presentation first.
Sure.
The finding.
Sounds great. Thanks very much, Naveen. So I wanted to share with you in the brief time that we have together, some of the key findings and recommendations from the task force on digital financing of the SDGs. And maybe I can start by sort of briefly telling you about what the mandate was. And this task force was started about 2 years ago by the UN Secretary General to really identify and recommend ways in which digitalization could be harnessed to accelerate financing for the SDGs. And by the SDGs, of course, we mean the 17 Sustainable Development Goals, to build on what Naveen was saying a bit earlier. So it's about no hunger, zero poverty, access to quality education, gender equality, access to quality healthcare, clean and affordable energy, etc., etc. All the things that really matter to us as humans in this world to live a quality life. And I would say the journey has been a 2-year journey. The work is now completed, and the recommendations and the findings of the task force have really been a wake-up call to many, I would say. On the finding side, and maybe that's what I would like to focus on during the course of this presentation, of course, it may seem very obvious to us that digitalization is already in many ways playing a key role in financing the SDGs. It would be impossible to have $1 trillion of green bonds, for instance, if large-scale data sets and rapid real-time data flows were not available on use of proceeds and were not becoming the norm. It would be impossible to imagine carbon markets in today's world that wouldn't rely on sustainable digital infrastructure or sophisticated digital infrastructure. And financing in many ways is driving access to capital-intensive utilities, with pay-as-you-go models emerging for access to green energy, solar devices, but also access to clean water or even to pay for health and education. So digitalization is already playing a significant role in today's economy. But I think what we've tried to explore is what can we do more? And if I just move on to the next slide, and I hope it's moving on your screen, the task force has really packaged its recommendations into an action agenda that consists of 3 main parts. Opportunities, and I will come back to explaining what the catalytic opportunities are about. The second part, which is on the top right-hand side, is really about building sustainable digital ecosystems, which is about aligning your fintech innovations in country at the national level and aligning your digital finance developments with your national priorities and your main national objectives in terms of long-term development. And this is particularly in the case of policy-stimulated developments in terms of access to capital, blended finance, tax incentives, fiscal incentives, etc., really what shapes your innovation space in a way that aligns it with your national development priorities. And of course, in the bottom part, you will see that the third key pillar is about inclusive international governance. And this is extremely important, particularly when digitalization is actually driving the emergence of a new generation of global companies, and we call them big fintechs, which emerge from social media, from e-commerce, from payments, from digital currencies, from banks themselves, which through digital transformation in many, many ways are becoming giants domestically in particular countries or even globally and internationally. And what is really interesting about these big fintechs is that they are starting to have, beyond financial stability and money laundering aspects, which are of course hugely important in terms of governance, they're really starting to have cross-border spillover effects across a range of long-term development outcomes in many developing countries. Global e-commerce platforms impact SMEs across developing markets. Digital payment platforms are impacting all sorts of payment activities and access to services in developing economies. And so these platforms are really becoming more and more important, and their governance is becoming a crucial point to address to make sure that they are aligned with sustainable development goals and they actually benefit all. But maybe one of the key findings and one of the important messages of the task force report, before I go back to the catalytic opportunities, has been to say that digitalization of finance in terms of financing the SDGs is really going to make a difference if the reconfiguration of finance leads to a citizen-centric financial system. And by citizen-centric financial system, what we don't mean is that the atomized decisions of 8 billion people is going to help us finance the SDGs. What we really mean is that individual citizens, as individuals in the first place, as savers, borrowers, investors, taxpayers, lenders, etc., really, when they are empowered and when they are enabled, can actually direct their financing to goals that really matter to them at the individual level, at a collective level, as members of a family, as members of an association, as member of a community. Citizens usually, when they are given the power and when they're given the means and the tools and the information, are able to make decisions that are in the long term important to them in terms of economic development and personal development, and that are in many ways aligned with the SDGs. And I think that was sort of one of the core message of the report that I wanted to share with you today. But if I go back to the catalytic opportunities, and maybe I will sort of end with the next couple of slides, I think what's really interesting about these catalytic opportunities that we have identified is they are really large, each one being $1 trillion opportunities a year in terms of scale, to repurpose and to rechannel financing towards sustainable development goals. But they're not just big in size in terms of representing, as I was saying, multi-trillion dollars a year scale, but they're also important because they can have trigger effects in moving other parts of the They are catalytic because they're big and large in every country around the world, but also they can shift the system and they can nudge it in a way that is more aligned with the SDGs. And if I sort of go through the 5 catalytic opportunities, of course, the first one is really about moving the growing global pool of domestic savings, which is now $23 trillion a year, towards long-term infrastructure financing, in a sense. And this is true for developed markets. This is true in developing economies. Even in these developed countries, domestic savings have grown 5 times in the last 20 years. If you look at Bangladesh, for instance, in Bangladesh, only 4% of domestic savings are actually being used for development finance. Just imagine that through the use of technology, mobile phones, financial instruments that provide liquidity in investment, but also really protect consumer investment when they decide individually to invest their micro savings into infrastructure. Just imagine how we could rethink development finance in that way. So that's really the first opportunity, and I'll give you one concrete example. The second one, of course, it's about funding the SMEs. SMEs are everywhere around the world the largest employer by far, and they require $5 trillion of financing in terms of credit every year. And we know that in the main, banks have really struggled to provide for that. And we also know that today, with new technologies and innovations in the digital space, with algorithmic lending, use of alternative data sets, real-time credit decisions, we have been able to solve the problems around data asymmetry. We have been able to address the SMEs' needs at minimum incremental cost and with zero collateral in many, many ways. And so this is sort of a whole new area for financing the SMEs, which is the second catalytic opportunity. The third one is really about aligning the $185 trillion sitting in financial and capital markets with sustainable development outcomes. We know that about $30 trillion of financial and capital markets have already been earmarked with ESG objectives, but I think now big data, remote sensing, AI technologies, etc., are really helping us better understand risks and improve risk pricing in many different ways that allow then money to be unlocked and directed towards sustainable development. But they're also allowing us, beyond risk assessment, to also improve the impact analysis. And that's also allowing to bring capital from the impact investing and the blended finance communities into the SDGs in many ways. And of course, then the fourth one, I'll go very quickly through the fourth and the fifth one. Fourth one is about aligning public finance with sustainable development goals. Through digitalization, public finance can become more transparent, more effective, and really give citizens a view of how their taxes are invested into sustainable development outcomes. And then the last piece, which is about citizens themselves now, which is citizens' behavior, is sometimes overlooked, but is extremely important. Today, global consumption is in the range of $60 trillion in 2020. One could imagine that through innovative apps and through technologies and through information, citizens could actually make more informed decisions in terms of the use of their finances towards things that matter to them. And we see in developing markets, and as in developed markets, more and more citizens being very conscious about recycling, about buying OGM-free goods, in terms of buying goods that come from ethical supply chains, etc., etc. Maybe just one example on the first one, if you allow me, Naveen, in 2 seconds. I think I wanted to give an example of the first catalytic opportunity, and Naveen, you are muted, so I'll just take advantage to just continue briefly. I think the channeling of savings into long-term infrastructure investment is a fantastic example of how to rethink development finance. If you look at Bangladesh, for instance, Bangladesh has today a $20 billion budget for infrastructure development. Only 4% of domestic savings are used towards that objective. Of international capital, with forex exposure, etc. And you can imagine that it's 15 to 20% more expensive for Bangladesh than to use domestic capital. Now imagine if we could harness citizen savings to finance these projects.
Kindly keep it short now. We have to get into a Q&A, right? We are kind of...
Okay, I'm concluding. Okay, let's go ahead. It's fine.
Yeah. So please use examples in the Q&A. I think we've gone through your main 5 impact recommendation. So end of the day, it's about uplifting the economic status of the consumer profile. So I come to Meghna first. You're first as a practitioner, even financing various consumers. What have you seen? I mean, in your business, that when you kind of lend people, have you seen any impact on those SDGs yourself?
Sure. So, I mean, there is impact at 2 levels, right? The first is the impact on the individual. Aiaze just spoke about citizen-centric policies that would drive us towards SDGs, right? So if you look at our Aadhaar initiative of giving a digital identity to every Indian, that was the first policy that kind of drove us towards a SDG. And today, 90% of the country, everybody's got a digital identity. And because we have this digital identity, the Aadhaar-related payments and Aadhaar-related, dispersals of different government schemes and, capital under different government financing schemes, all of that is done digitally. So in India kind of leads in the entire APAC in terms of the digital rail payments or real-time payments that people receive into their bank accounts because of the Aadhaar infrastructure, which is about 41 million transactions on a daily basis, right? And even if you look at the, because of Aadhaar, now every Indian has a bank account. I think because of the fact that the government said all of the Jan Dhan bank accounts will be opened using Aadhaar, I think 80% of people in rural area today have bank accounts. And apparently they also now have access to internet because they're also mobile enabled. And they're receiving all of the different, monies from different government policies into these bank accounts. And especially during COVID, the digital savings of people in rural areas has increased by 131%. And, in the past 4 years, 50% of people who have bank accounts under the Jan Dhan scheme are women. So I feel, because of the fact that we got a digital identity and connected it to digital financing and rails payment, we've seen that, SDG goals like reducing inequality, the fact that everybody putting India on top of the innovation index, right? We're now, I think, in top 50 countries in terms of our in being innovative because of the entire Aadhaar and the UPI stack that we have. And the second big innovation was the ability to receive payments, right? That's the entire UPI stack. In the past 9 months, the digital financing transactions have overtaken ATM transactions, and we've grown in terms of volume by about 60%. So I think we do over $2 to $3 billion, digital financing transactions in India. And now that translates to digital financing, right? If you look at in the landscape in India, we have 60 million SMEs, right? And only 15% of them have had access to formal finance. But there have been a slew of policies from the government to kind of bring the SMEs and small businesses into the formal economy, right? That started with having a digital identity for individuals. Now it's translated to having a digital identity for businesses. So we have something called the Udyam scheme. And in the past 6 to 8 months during COVID, 1.1 million businesses have gotten themselves a formal business identity by registering under the Udyam scheme. And what this is translated to is the government now has been able to, hear the woes of these entities that are registered in Udyam, and they've written to a lot of the corporates who are a part of the customer base of these small businesses, where they've had difficulties in receiving payments for, different kind of services that they provided. And the government has written to, several thousand large businesses to be able to enable, to, tell them to pay these companies on time during COVID. And we also have a TREADS platform, right? The government has come up with something called a TREADS platform, where any small business, right, which provides services to the government or to any corporate whose, size is over 500 crores, can get access to reverse auction financing at the lowest possible rate by different lenders. And the TREADS platform has done close to $2 billion worth of transactions. It's approved that much of financing in the past 2 years, and that's been quite commendable.
Interesting. So, Suresh, I think you have kind of had multiple stints, right, from banks to kind of Vodafone-led M-Pesa, kind of to then India Post, amazing implications. I'm sure you have many stories firsthand that you would have seen of the impact with those customers. Would you want to share some of those?
Yeah, sure, Naveen. I think as we were looking at some of the points that Aiaze was calling out, clearly one part is building sustainable digital financing ecosystems. And I think to that extent, Meghna already called out, and I would extend it from there. Digital national identity has clearly been the pivot of a lot of the progress which has happened in creating an inclusive economy, which means everybody was able to finally identify themselves and become a part of the formal financial ecosystem. The seamless payments have clearly made people the ability to move money to and fro. And I think the main thing that we've seen in this entire system is the fact that this stack has then led to various things. It is on one side, let's talk about interoperability, and I will take the India Post example, where we were actually able to engage each and every postal worker, and we have a distribution strength of almost 200,000 people. And by simply equipping them with a smartphone and a biometric device, you were able to take banking services to the last mile, to the doorstep of the consumers. So one is the actual digitization of the ecosystem, but the fact that today there are a lot of people who are at a certain strata in which they don't have direct access themselves to the digitization and the digitization move. So assisted services become very important in a country like ours. And that is where we saw the leverage in really extending the rural banking infrastructure by almost 2.5 times. And very importantly, I think the other part which becomes very relevant is it's not just about extending financial services and opening an account. It is about digital literacy. When we talk about assisted and how digitization has helped to take knowledge to the people, that when they are saving to create wealth. They are again saving towards certain goals in their lives. And I was reading an interesting part in the report which said people are not just looking at financial returns, but they are looking at what is the outcome of their the money being managed. And I think aligning it with the development and sustainable development at the last mile becomes a very key element over there. Some of the other things which become very relevant, and again from experience even within the organization where I'm now, is about public finance. Now, clearly in a country like ours, when we look at the current scenario of the pandemic, the ability of the government to provide benefits at the last mile, leveraging the PFMS system and direct benefit subsidy going directly into the accounts of people has been a big and a very agile and a quick response which has been enabled again on the back of digitization. And I would again link it back to say that today people could not go to the banks and access their bank accounts. And postal workers have been able to actually come to their houses and provide access to the finance or the cash. That clearly is in terms of whether we talk about the establishment of the first central depository in the country, which made the entire depository ecosystem transparent and much more clear where the money is going, and the whole tax information network, which provided all the people the ability to have individual tax ledgers and the transparency which comes in the system by having permanent account numbers and all. So these are things which have played in a big way, and it brings the ecosystem together to create sustainability and development. and the transparency as to how money is moving, how are the budgets being tracked, and the ability to see how it is getting applied.
So, Suresh, just one more question to you. I mean, with so many things happening over a decade or so, we're still seeing as a lacking in most of the sustainable development goals. If you look at the global index, and even in terms of financial services digitization, while the pace is very rapid, still we are kind of in terms of penetration pretty low. What do you think are the challenges? What do you think we could do better as an entire ecosystem, be it the players, be it the government, be it the policymaker? As we know that we want to get there, right, sooner, in a decade or half a decade, as fast as possible. What would be your advice? Aiaze, I'll come to you last for the closing remarks as well as some global example. This is what you hear, what's happening in India. So, Suresh, over to you. And Meghna, I'm coming to you for the same question after Suresh. Yeah.
So, there are, I think, 2 or 3 things which are important over here in this context. One is we talk about a national infrastructure and a stack being created, and I won't repeat that part because Meghna called it out very well. So the India stack has reached out to every Indian. But today, when we clearly call out in India versus Bharat, when we go to rural, I think a couple of things which become very relevant is one is the product design. Because as I called out earlier that, while digitization is there, when you are touching a section of the society which is not really that tech savvy, which may not actually have the devices which we see in urban India, while the penetration of smartphones is ramping up at a huge scale. But we have to create and design products which are bringing them and making them inclusive into the ecosystem. Assisted support into bringing them into the formal ecosystem is one part, but then their needs are different. They are looking at different sort of products. As I spoke about earlier, it's not just about opening an account. It is also educating them that what savings can do for them. And similarly, whether you talk about investment products, you talk about insurance, the sachetization of services, the personalization of services. So when you go to rural India or you look at the Bharat equation, that is where some of the value of digitization has to be translated into a different model which can touch the people and bring them and make them inclusive into it. Even when we talk about citizen-centric services, their consumption and their way in which they are consuming services is different from what you and I would be doing in urban India. So I think those are some of the areas we need to press forward. And while identity is there and a huge, people have got part of the ecosystem, some of these equations have to change and that will create a bigger ground thrust as we see it.
Yeah. Meghna, over to you.
Sure. So, that was very well articulated by Suresh. So, what I would like to add to that, I'd like to focus on what innovation we've had in digital credit in India, both for Bharat and for urban India, and and I also would want to talk about what are the things that we need to kind of push us more towards sustainable goals. So we did a survey and we reached out to about 500,000 small businesses all over India. And we asked them, what are your top 2 needs, right? They said they need more business and they need more credit. So and whether it's in Bharat or whether it's in urban India, when you look at small businesses per se, they need more, they need credit and they need more customers, right? So if the innovation that the country needs today to kind of push ourselves more towards sustainable goals is to give a big push to SME and MSME credit. Because small businesses contribute to about 35% of our GDP today. And if we support them to increase that share of the pie, to make the 35%, maybe 40% or 50%, we'll move closer towards, our sustainable development goals. So, if you look at small businesses, right, they may not be formally organized. So one of the key challenges that they've had, especially when it comes to credit, is banks are looking at small businesses and all businesses traditionally under the same lens. Which means that if you look at the entire universe, whether if you look at an Infosys or whether you look at a small business, the way they would be assessed for credit would more or less be on the same way. And that's been the reason why only 15% of small businesses have had access to credit. So the fact that we've had the entire digital infrastructure built in, a lot of alternative data points about small business now is becoming increasingly available to lenders. One example is the fact that the entire goods and services tax, the tax that now we have to pay this online, right? The GST. So the GST data now, a small business can share it with a bank just with a simple OTP transaction. So that's become like a very powerful alternative data on the basis of which they can actually get access to better credit and better rates. So for the need of the hour now is for all of the fintechs to build out solutions to build, credit scores and risk scores using different kinds of alternative data sets about these small businesses. In fact, like if you look at formal rating agencies, right, they only cover 50,000 entities, which are listed and unlisted, and they rate them. And we have 63 million small businesses. We don't have a specific dedicated bureau like a CIBIL, which is for individuals, for small businesses. So now I think that the fintech community now is increasingly looking at solutions to harness this alternative data to bring out credit and risk analysis on small business. And I think that we see a lot of innovation there. We see Credit Monthly, which is doing a lot of work for individuals, right? And in the space for businesses, businesses like Karza Technologies, Crediwatch, and even Perfuse with its account aggregator model is harnessing a lot of alternative data, of small businesses, like their bank statements, like their IT returns, several different kinds of data points. And it's enabling, banks and lenders to be able to look at these small businesses from a different lens. So that's the innovation that I think is going to see a big push in India, and that's kind of what we need so that the businesses are able to get good credit rates instead of the 16 to 24% that they get today.
Interesting. So I think if we see, Aiaze, that India has been on forefront when it comes to digitization of financial services, or let's say the economy. I think the mission of India being Digital Bharat or Digital India is very much on. And this has happened with increasing access of internet infrastructure, with the multiple telecom players getting into it, added to it a digital identity layer, added to is now information layer, which is in form of account aggregators. And there are a lot of these pillars coming in, the integration of tax information, and a lot of fintechs are working in. And I think we are all seeing results of that actually percolating down to even gradually last miles. So there are a lot of examples in India being a massive country while we are let's say while we say that we're lagging, but it's also an opportunity. And probably we could be the greenfield for the whole world to look at, that how the whole digitization can really drive sustainable growth. And I think in about half a decade, we'll have multiple models. Would you want to share some more couple of examples? I know you were kind of about to present and I stopped you there. So maybe you want to cover a couple of those examples and some of your closing remarks as to what you heard from the India side.
Thank you, Naveen, and thanks, everyone. I think Meghna and Suresh have already said a lot, and I apologize to my fellow panelists if I was running a little bit longer, a bit earlier. One gets carried away when you're passionate about the topic. I think, so first of all, India has really achieved very impressive progress, right? You've been mentioning the India stack and all the different pieces that it comprises of. I think it's really exceptional what's been built in India in terms of infrastructure to really advance financial inclusion. Now it's probably a matter of seizing the opportunity to deliberately shape that ecosystem towards financing the SDGs in a sense and towards supporting long-term development objectives. And maybe I can give you two brief examples from other countries, which I think would be very relevant to the Indian context. One is the project I was describing in Bangladesh, which is really about harnessing hundreds of thousands of micro savings into financing long-term infrastructure development. $20 billion of infrastructure budget in Bangladesh today, only 4% of domestic savings being used against that $20 billion. Most of it being borrowed internationally with high cost of capital, forex exposure in international currencies, etc., etc. Now, just imagine the benefit if you were able to innovate in terms of financial product to allow citizens to actually invest their savings into what matters to them. They could pick to finance a bridge, they could pick to finance a hospital, a school, something that's important to them. They would get the benefit of use, and they would also be getting dividends from it. So there will be economic distributional effects coming out of it. So that's sort of one example that I think is extremely exciting. And in Bangladesh, we're planning to use blockchain to track payment transactions and contributions for transparency. And the other interesting example is in Zimbabwe, where with EcoCash, which is the largest payment provider, and the International Stock Exchange from New York, Aiaze, we built a digital exchange that uses payments data to SMEs and fast growth businesses to actually be able to rebuild their book value and list them online on the stock exchange for them to be able to mobilize domestic capital that's needed to fuel their growth. So these are just two examples very briefly, which I think in many ways show you that the power of digital beyond financial inclusion could actually be harnessed to fund national long-term priorities. Thank you, Naveen.
Any last comments, Suresh? Just the brief ones.
So Naveen, I think a couple of things. I'll just quickly call it out. I know we are running against time. I think, as you said, what are the innovations coming in? So I think data empowerment in the hands of the consumer is going to be critical, as Meghna called out. So clearly, our account aggregator ecosystem framework, where the regulators have stepped in to create it, actually puts the power in the hand of the individual to how they can use their data and what they can get out of it. Whether it is bank statements or GST information, that is going to be a very important pillar for us going forward. The other critical one is creation of open marketplaces. So very clearly, when we look at the economy and going forward the way it is going, creating open networks for digital marketplaces and connecting multiple players in an ecosystem which is completely open is going to be critical. And lastly would be capacity building, where you need to actually go last mile and you are able to digitally reach out to people and educate them how they can leverage on the system. So these are three important pillars, I think, which will make the connection much easier.
I think we are like running into last few minutes. Meghna, in brief, just to close.
Yeah, so I think that, to add what Suresh said, especially bringing digital finance and access to that in marketplaces, I think would be the next wave to kind of deeply penetrate. If it's an Amazon ecosystem or a Udaan ecosystem, or even a Stellabs ecosystem for the supply chain of, milk products throughout the country. If you bring credit where trade is happening at that point and give early access to credit to small businesses, we will move faster towards achieving our sustainable development goals.
Sounds good. So thank you all. I think we had amazing discussion, and thankfully, I think all these examples that you also gave, Aiaze, kind of relates to a lot of things that are happening in India. We have infrastructure bonds, which actually consumers can save and then actually earn interest. And there are a lot of special purpose instruments and bonds that get used. Thankfully, India is very high saving society, while the credit rates are high. So there are a lot of interesting examples that we can look forward and look at other countries at the same time, create digital flows around it, and then create impact on SDGs, and probably share with the whole world, and at the same time learn from the world. Thank you very much to all of you. Have a good day. Bye-bye.
Thank you, everyone. It was a pleasure.
Thank you.